US M&A deals above $5 billion have soared this year, 26% higher year over year after hitting record levels in 2018. One bank capitalizing on renewed M&A enthusiasm is RBC, which advised 10% of US deals so far this year. Joining us now from the RBC Tech, Internet, Media and Telecom Conference is Larry Grafstein, RBC's Deputy Chairman of Global Investment Banking. Very good afternoon to you. Thanks for joining us.
Nice to see you all.
Let's start with a little summary of the current sentiment. So big deals are up year over year, though small deals in the US are not. And internationally, what's the outlook? Summarize where we are so far year to date.
Yeah, it's really interesting. It's a bit of a bifurcated market. We like to segment the market among the bigger deals that you mentioned. So very robust this year, dollar volume up year to date, 25% plus in the U.S. But total dollar volume is only up 4%, and that's because deals under $5 billion have actually been down. Also, when you look at Europe, and obviously is facing its own types of challenges with negative interest rates and some political issues in certain markets, European large deal volume is down almost 50% year over year. And so when you look at the global M&A volume in total, total dollar volume is down about 8 or 9%. But it's been the U.S. big deals, which many of which have happened the first few months of this year, that have been driving total activity.
Larry, whether it's M&A activity or whether it's companies going public, how much hinges on the presidential election next year, and what does that mean in terms of the window?
Well, sometimes, these presidential elections can have somewhat counterintuitive effects. For example, we feel like it's a very good deal environment right now. Obviously, all-time equity highs, good time to sell a company. Also, all-time or near all-time debt cost lows, a good time to invest in a company or borrow to do so. But when you look at 2020, obviously there's a big dispersion of potential policy outcomes between the current administration and possibly a Democratic administration. You were just talking to Larry Summers about tax reform, and if you look at 2020 and as we approach the new year, companies look at what might happen with tax reform. Would capital gains rates go up to equalize income, as some have suggested? Would total corporate tax rates go up, as some of the presidential candidates have suggested? How would the regulatory regimes in different industries, or certainly antitrust enforcement, how would that differ from, say, this year to the next administration? And if you believe that there's a chance that there could be, a difference, and you have a strategic move that you're interested in making, it may be necessary to think about executing on that in a 2020 timeframe. And as you all know, you can't just sell a company in 2 months. You have to. There's lead time for these things. So we might actually see a bit of an acceleration of activity, in anticipation of a political change.
Larry, how often does the China trade issue come into your conversations with CEOs in terms of whether they think tariffs are limiting what they're able to do if they stay for a long period of time? Is that a factor, or do they look way past that?
Well, it's a great question. I think most, corporate boardrooms where we're talking about these issues, they're concerned about the effects on supply chains. That's more of an internal issue than really the deal environment. I mean, China inbound M&A is obviously off considerably. You had a little bit of sort of robust period there in 2015, 2016, before the Chinese themselves sort of pulled back. And just given the overall environment with issues around Huawei and the trade discussions, it's not a great environment for Chinese activity. That said, we just had Joe Tsai, the vice chairman of Alibaba, at our conference for lunch, and he was laying out, pretty optimistic perspective about the future of U.S.-Chinese relationship, and also the opportunities that they have in the domestic Chinese economy. So I think it's an important topic because of the uncertainty and also the potential shifting of things like logistics and supply chains and suppliers. But in terms of the long-term macro effects, it's people are not really viewing that as a driver of deal activity, and certainly people aren't really looking to invest in China per se right now.